Hello traders, it's Rick here. I wanted to take a quick minute and uh, put out a little video about back testing. Why is it important to back test? Um, and kind of get an idea of what to, what kind of data to collect when you're doing your back testing. Um, also, sorry, I got too many things going on real quick. I'm trying to finish something up. But also, uh, give me 1 second. Sorry about that. Give me 1 second. Okay, there we go. So yeah, I mean, I wanted to do a short video today, and kind of talk about what is backtesting, why it's important. Also, you know, to stress out that you should be, when you're doing your backtesting and collecting your data, um, you should be collecting as much data as you can, so you don't have to go back through it and collect more data or whatnot. So, because that's kind of what I'm doing now. Uh, Not because I didn't collect enough data, but because I'm looking to go live next year, um, and I want to make sure that I have the best. Uh, I don't want to say I want to have the best trades, but um, I want to make sure that I'm able to collect uh, the most out of every trade with risking the least amount. Um, that's kind of why I'm doing what I am today. So basically, it's currently what 9 o'clock Central Standard Time. I've been up since 4 Central Standard Time, so I mean I've been up almost 5 hours. I've tried to produce this video a couple of times, but I was having technical difficulties or user errors. But as I scroll back to the charts from this morning, you can kind of see that I've got several advanced patterns marked on my chart. Some winners, some losers, some draws. But basically, what I was doing is you know, I- I'm I'm marking these trades. Um, I do have pictures of all of them individually, but I don't have them all on one chart like this. So this is going to be beneficial to me in the future. But basically, I just started out back in what time frame? I know a 5,000 chart, but I think it's like 2,000 or something. But let's see. So this chart starts back in 2003. So and it's on the hourly chart. It's on the euro dollar. But basically, I just went through and I'm just identifying advanced patterns. And it's not any specific one. I'm doing bats, Gartleys, and ciphers, and I'm just highlighting them, for winners and losers. That way, I can go back and see if there's anything that I can do as far as stop placement and targets to turn losers into winners. Okay, for starters, and then what can I do differently as far as stops and targets to get more out of the winners. Can I adjust my stop and target placements um, and stuff like that? I mean, I've played with it a little bit, but as I look to go live, I want to make sure that I have the data that I need to trade it the way I want to. So when you're back testing, uh, well, let me put it this way: what is back testing to you? Maybe that's the question I should ask: is what is back testing to you? Okay. Well, for me, back testing is having a, uh, a certain set of rules that I am looking to trade. Okay. And uh, testing those set of rules to prove that they are that they will be profitable, in the long term. I mean, we're all going to have losing trades. I mean, we may not like it, but we're going to have losing trades. I mean, it's just the way it is. But is there a way that we can improve our profitability and reduce our losses, further than what we currently have? Uh, so, I mean, that's kind of what I'm working on now before the year's up. Uh, so, um, what what we have to do is a couple of different things. Um, uh, okay, so what we have to do is a couple of different things as far as back testing. Okay, so the first thing we have to have to start back testing is we have to have a pair to trade. So ask yourself, what pair would you would you like to trade? Okay, and for me in 2017, it's going to be the euro dollar. Okay, that's the pair that I'm going to trade. Okay, now I do have a set of rules for what's going to happen as the year plays out, and I'm trading the euro dollar, but I want to kind of keep that under wraps for now. But that will be coming out uh, uh, in a little while. I mean, I don't know if it's going to come out before the first of the year, or I may do it. I might actually announce it right after I start trading live. But so for starters of 2017, I'm going to trade the euro dollar. Okay. Then you need to know what time frame you want to trade. Okay. Um, and there's some things that you have to think about when you're picking a time frame. Okay. If you pick the daily chart, of course you got more time for the trade setup. The downside to it is, you could have less trades setting up day to day, week to week, month to month, and year over year. Um, if you go down to the 15 minute or the 5 minute charts, yeah, you're going to have a lot of action, but more than likely you're going to have to sit in front of the screen to catch those trades, okay, and to manage those trades. Um, and for me, um, in 2017, that's not going to be feasible. Okay, um, I do not trade full time. However, I will be trading live January 5th, and you can watch me trade live 5 a.m. to 8 a.m. Monday through Thursday, Central Standard Time. I am in Texas. Um, but I'm not going to be able to sit in front of my charts all day. So I've had to tweak my trading rules and plan a little bit to fit my lifestyle. Um, in 2016, I've probably averaged um, 40 hours or more per week just in trading activities, whether I'm on Twitter talking to other traders, or if I'm sharing trading ideas on TradingView, or back testing a strategy, or demo trading, or whatever. I've I mean, I don't know for sure because I didn't track it because I didn't care. Um, but I was putting in at least a minimum of 40 hours a week in my trading. Um, on top of that, I do work full time, and my job is with my job I'm required to work a minimum of 50 hours a week. So 90 hours of my week is tied up between my job and getting my trading off the ground. So as we get into 2017, I want to kind of reduce my trading time for a couple of reasons. Um, Part of it is because of my dad is 100% disabled, so one of us has to be with him at all times. So when my mom and sister work, and they need someone to help sit with him and watch him and stuff until they get home, I do help with that. Um, and then I've got two kids. My son graduates in May, and my daughter's 13. So, um, and she's active in some school activities as far as band, and she's in uh, GT classes, and she does a lot of competitions. She's in an advanced placement uh, uh, classes, at school. So they have competitions, and she goes, around and competes and stuff with other kids at other schools and stuff like that. So and at the end of the day, I mean, you know, the whole point of trading is to be able to create a lifestyle that that you enjoy. And sitting in front of a computer, although it's fun, there's other things that I want to do. You know, and if I can set my trading up around my lifestyle that I want, then I can have the lifestyle I want. And I think that's one of the things that is tough for newer traders to think of and to comprehend is you don't have to trade every day all day. You know, you don't have to always be in a trade. You have to have a specific uh, strategy and time of day that you're trading and day of the weeks that you're trading. And the same goes for when you're not trading. You have to have a specific time of day that you're not going to trade. You have to have specific days that you're not going to trade. Of course, you can't trade on Saturdays. I wouldn't recommend trading on Sundays because I have yet to have a profitable Sunday. Um, and as a newer trader, I mean, I just the market's open on Sunday and I wanted to get in a trade, so I did. And guess what? Over time, I had no profits on Sunday trading. So there's no need to even look at a chart on Sunday unless you've got something on your eye from Friday or something. But I will be loading my charts up Monday morning. Um, I may end up loading them up Sunday night before I go to bed just to make sure that um, when I do wake up Monday, Ninja Trader's up and running, then I can just reload the data and go from there. Um, but it's just you want to build your training, your trading, not your training. You want to build your trading around your lifestyle, not your lifestyle around your trading. And I guess that's the point that I want to get across. Um, but for me and what I've got going on in my personal life and stuff like that, for me, the trading time frame that I'm going to be trading is a 60-minute chart. Okay, and your time frame could be different. If you're retired or you don't work, or if you work at a job that you can watch your charts and stuff like that, a 15-minute chart might be okay. You know, um, if you're off every Tuesday and Wednesday, or Monday and Tuesday, or if you're off every one day a week during the trading sessions, you could choose to trade that one day during, what XYZ specific time of day. Like say you're off on Mondays every week, then you could choose to trade, 8 a.m. to 11 p.m. I mean, 11 a.m. or, oh my goodness, 8 a.m. to 11 a.m. Every Monday, and that's your trading time frame for the week. And we have to adjust whatever it is that we want to do in the financial markets around our personal lives, because life doesn't stop. You know, you can close your trades and be done for the day, and not have money at risk, but your life never stops. Um, People get sick, and if you got kids or spouses or whatever, I mean, there's always demand for your time. So that's why it's important to build your trading around your personal life and then go from there. Okay. And that's why I've chosen the 60-minute chart, because it's going to give me the time that I need for these trades to set up and play out. And I will be able to check my charts, every hour, every other hour from my phone. Um, the only obstacle that I could see in 2017 is the fact that when I'm out at my mom's house sitting with my dad, um, the internet out there is not very good. Um, they live uh, out in BFE, let's say, and sometimes the internet's good, sometimes it's not. So um, I won't be actively trading out there, but I mean I will be able to manage a trade, close a position out from my phone. But I'm not going to trade from my phone. But I mean I can manage a trade or something like that. But um, what period would you like to trade? Is the euro dollar? What time frame would you like to trade? The next thing you need to know is what strategy would you like to trade? Sorry about the rambling on there. Okay. And for me, I'm actually going to be doing a CTS system. Um, the CTS system is a technical scoring system that Trade and Power teaches in their 12-week transformation course. It's a rules-based trading system. Um, it has rules in it that can be customized to the trader, and that's what I like about it. Um, the other part about it is that it's like a checklist. Do I have this? Then I look for this. If this happens, then this needs to happen, and so forth. And it helps me be consistent in finding the higher probability trades. Um, and for me, I think structured based trading, or a structured based system like the CTS scoring system uh, is perfect for me, because the history that I have with trading um, goes back, I don't know, probably, if I had to guess, I mean, I don't know exactly, but I'd have to say I've been trying to figure this stuff out for at least 3 to 5 years. I started out in penny stocks, blew some money in that. Then when I changed jobs, I rolled over my 401k into a self-managed account with TD Ameritrade, and try to do penny stocks again. Lost most of that, and then I tried to trade big boy stocks. And when you got to pay $10 to get in and $10 to get out, you got to make $20 to break even. And for me and my account size, it just wasn't feasible. But it was too late when I figured that part out. So I come across the forex market, and the position sizing I had no clue about. Risk I had no clue about. Targets, I knew I wanted to make money, and I wanted to be rich and whatever overnight or whatever. But um, I mean, it was just I mean, it was a disaster. Okay, um, and I'm sure you've went through the same thing. Um, if you haven't, don't trade live until you have back tested, forward tested, and you know without a doubt that your strategy will be profitable in the long run. Okay, and then you just need to trade that strategy flawlessly every day. Okay, but for me, with what I've been through and my personality, I like risk. I like taking risks. So um, the CTS system, having a rules based trading system is going to help keep me in line um, as I move forward in my trading journey. So let's move on. So I don't want this video's going to get long, I bet, because I'm talking too much. But so we have, what pair would you like to trade? For me, it's the euro dollar. For you, it could be something else. What time frame you want to trade? For me, it's the 60-minute. Okay. Maybe I shouldn't put in there what time frame you want to trade, but what time frame fits your lifestyle is maybe what I should have put in there. But what strategy would you like to trade? For me, it's going to be the CTS system. Um, Now, Trading Power does have a basic CTS system that they teach. However, it's customizable to the traders. Um, but you can just kind of tweak it to what fits you and your trading style. Okay, so the next thing, once you have a trading strategy that you want to use, there's some other components that you have to have. Um, let's see how I want to say this. There's there's three things that you need to know before you ever enter a trade. Okay, so three things that you need to know before entering a trade. Okay, and um, the three things that you need to know before you enter a trade are: why are you entering the trade? Okay, and this is where your entry reason comes into play. Okay, and uh, there's a ton of different entry reasons. You can use advanced pattern as an entry reason. You can use a higher high, higher close, lower lower, lower close. You can use a structured base entry reason, a doji candle, a moving average crossover, or whatever. But you have to have that predefined before you ever start back testing. Okay. The next thing you need to know is, where are you going to put your stop? Okay, and that's going to be stop placement. Okay, on your stop placement, some people use a fixed pip spread. Some use Fibonacci levels. Some use moving averages or parabolic stars or God knows what they use. One to one equal measure moves from where their targets are going to be, or whatever. But you need to know where you're going to get out if you're wrong, or if price goes against you. Okay. Um, the next thing you need to know is, where are you going to take profits? Okay. Get out of trade. Okay. Those are three things that you need to know before you ever enter a trade. Is, why are you entering the trade? Because you don't want to just enter just to get long or short. Okay, and you want to know where your stop placement is. Okay, so you're getting out um, uh, if price goes against you, and where you're looking to take your profits to get out of the trade and take your money off the table. Okay, Um, with stop placements, I'm gonna put in here a hard stop. Okay, not mental. Okay. Um, I do not place a trade uh, without having a hard stop. If price hits XYZ, I'm out. Period. Um, I just uh, when I enter a trade and I got risk on the table, I assume that money that I'm risking is a loss. If I lose, I lose. It doesn't matter. Um, and you have to get in that mindset that you're gonna lose. It's part of the game. Nobody can win 100% of the time, and those that claim that they do are lying to you. Uh, you know, um, so those are the basics of your back testing. Okay, but the most important part of it, okay, is once you have your pair and time frame and your strategy that you're going to trade, okay, you need to write it down and follow it through the market, okay. Um, and then when you find a trade, you need to collect that data, okay. You need to collect data on multiple stop levels, multiple target levels. Um, that way, when you're done collecting your 100 trade sample size, you can go through and tweak your stops and your targets to gain the most out of each trade. Okay, and I'm going to kind of give you an idea of what that looks like. Um, let me see if I can find this spreadsheet here that I had. Okay, so on this spreadsheet right here, what we got is I've titled it back testing of the euro dollar bat pattern. Okay, to minimize the columns that I need for my back testing. Okay, and another reason is because I have previous knowledge of the rule set for the patterns that I trade, as far as what Fibonacci levels have to be hit for bats, Gartleys, and ciphers and stuff. Um, when I'm going through a chart, it's hard for me just to focus on one pattern because I know that if I'm looking, if I'm looking to look at bat patterns, okay, and it touches the 50% and then it goes straight up to the 618, that automatically triggers me to look for Gartley patterns. Okay. If we get a retracement back into the 382 and then it makes a lower, lower, lower close, um, I'm triggered to look at cipher patterns. So what I do is I collect all my trades on one spreadsheet and then I transfer them over to individual pairs, or I shouldn't say it's the same pair, but individual patterns to break it up and go that route. If that makes sense to you. But some of the things that you want to collect is the date and the time. Okay, the time is important because if you're collecting data and you're not profitable, say after 12 o'clock noon, then there's no sense in trading after 12 o'clock noon. Um, the dates are fine are good because you can pinpoint what day of the week. I mean, you can probably add that to it, day of the week. Let's do that. Let's see. Insert. Was it a column? Let's put day of the week in here. Okay. Because what you can do is you can look and see if there's a certain day, like I know Sundays are no good. If you're back testing or whatnot, and you notice that Wednesdays are no good, there's no sense in trading on Wednesdays. But put that in there, the time, the entry price, the stop level. Okay. Now on the stop level, I'm gonna highlight this gray because I don't want to put anything in here. Let me see if I can. Give me 1 second. I want to see if I can do something here. Let's see. Merge those. Okay. So I don't want any data in this column, but I've got a stop level of the 113 fib extension, the 127 fib extension, the 1414 extension, and the 1618 fib extension. You could put in there, some hard stops, set pip stops, 10 pips, 20 pips, okay? And you can do the target too. I mean, you can do, let's do it the same way because I don't want anything in here. Okay, but we can look at targets for the 382, the 618, the 786, structure-based targets, and trail stop targets. Okay. Um, Now on your trail stops, this might be a little bit harder to back test because you're gonna have to every time you move your stop, you're gonna have to roll it or whatnot. But so I mean that the price is gonna change, but you could maybe put in here, I don't know, 8 moving average, okay, or SMA, a simple moving 8 simple moving average, something like that. I don't use moving average, so I don't know how you would actually use it to trail stop, but you could do uh, the parabolic SARS, uh, you know, uh, ATR below the low of of something or another. But you want to collect as much data as you can, so you know which stop loss and which target uh, get you the best results overall. So that's kind of what you need to collect as far as data. You could probably put notes out here too to the side, um, and you can get creative with it. I mean, you can do all kinds of stuff with Excel, but uh, once you have everything set up on what you're going to do and so forth, you just load up a chart. And on this chart, I've started back in 2003, but I'm currently right in here somewhere. I got these two patterns here. One's winner, one's loser. But what I'm looking for is just I'm looking to identify advanced patterns, and I'm looking to find out which ones are winners and which ones are losers, and that's why they're colored red and green. So this here is a bullish cipher that was a loser, and this here was a bullish Gartley that was a winner. Okay, and is I shouldn't say was a winner, but could be a winner because price did come down a little bit farther before rallying up and retracing higher. Okay, and then initially falling back lower. But this is kind of what I'm looking at and collecting data on is, you know, so if I take if my strategy right now is a 113 fib extension of the A to X point, right? Okay, this trade right here would have been a loser. Okay, but see how it just stopped me out and then it ran higher. Okay, well, could I turn this into a winning trade by using a 127 stop instead of the 113? Or if price rallied down and hit the 127, can I use the 1616 or the 1618 extension for a rally up? And then can I manage the risk to work in my favor? Better than a 1-to-1 or at least a 1-to-1. But that's kind of what I'm doing now. But I want to try to find all these patterns first, and then go back through and draw out all the different levels and key it all in the spreadsheet and stuff like that. But so um, let's kind of walk through the charts and see if I can't find a trade setup and kind of walk you through the process of actually looking for a trade. Um, I'm just scrolling through the charts. I'm not drawing swing highs and swing lows. I'm not labeling the charts for outside returns or nothing like that. I'm using this time to build my what they call the ARS. My visual recognition of the patterns um, as I go through the charts. So What I'm looking at right now is this leg right here, and I'm just going to go from swing high to swing low. Okay, so price rallies up. It hits the 618, which puts me on Gartley pattern alert. We do get a retracement, but is it enough? So I need a 618 on this side. We're not going to get it. It's going to be a 50% before rallying higher. Okay, so this is nothing. So I delete it and start over. Okay, now I'm looking at this move. Swing low, swing high. Okay, we get a 50% retracement, which can do two things for me. Okay, it can put me on cipher pattern alert when it hits the 382, and then bat pattern alert when it hits the 50%. Okay, but for the bat pattern, I would need price to rally back up to the 50%, which it does. Okay, without breaking this high up here. Okay, and at this point, let's see. Let me script this over. At this point in time, I am on bat pattern alert. Let's see if I can zoom in and see if that's bigger for you. Okay, because price has rallied up. Okay, it's come down and hit the 50%. Okay, I drew my other fib on there, and it's rallied up. It's hit at least the 50%. Okay, and it actually touched the 786, which is fine, because as long as it doesn't violate these highs, I'm okay with this bat pattern completing down here at the 886. Okay, but as you scroll forward, price does come down and touch that again, but right here, this bar right here makes that bat pattern invalid. Okay, and that's okay, it happens. Okay, but at that point in time, because we did get this move down to at least the 382, I am now on cipher pattern alert. Okay, because of my rules. So from swing low to swing high, back down in. So now I'm looking for a move up into the 127. Okay, but price cannot close above the 1414 because that's my rules for the cipher pattern. So you just scroll through the charts, find out what it does. Okay, on this bar here, okay, on that bar right there, this cipher pattern is invalid. So you delete your charts or your drawings. Okay, and you start over. Okay, now what I'm going to do is, because we got this push up higher, I'm going to go back to my swing high back here. I'm going to go swing high to swing low. Okay, look, we got a 618 retracement, right? Okay, what does a 618 retracement put you on look for? Gartley pattern, correct. So we got, let me take this back off. So what we're looking at is we got a move like this, swing high to swing low. We've got our 618 retracement, which is going to come right in here at the highs, right? Then what we're looking for is we're looking for a 618 retracement of this leg right here. Okay, so Fibonacci retracement from swing low to swing high. Okay, and we just scroll forward. Okay, and we hit the 786. Okay, once the 786 is hit, it is no longer valid. Okay, so then all you do is you delete your charts. Okay, and you start over. So now we got a swing low to a swing high here. And you just kind of follow the chart. Okay, we got a 382, so that could put me on cipher pattern. We haven't touched the 50%. Okay, now we hit the 50%, so now I'm on bat pattern alert. Okay, now we straight fell off a cliff, hitting the 786 and the 886, which makes everything invalid. delete the chart, and start over. Okay. Now, does it touch the 382? What is that data? So the high is 26. Okay, so we missed about 2 points. What I was going to say is this still may be a bat pattern for some. If they use a 382 on the second leg, because it would look, their bat pattern will look something like this. Come down. Some, I don't know, some may look at like this. It wouldn't be for me, but that's kind of what I was looking at. But I think it's just junk. But because I mean, all those wicks and it's just a mess. I wouldn't trade that. Um, but you just scroll back down, okay? Then what you got? Now you got swing high to swing low, and you just scroll through the charts. Okay, lower, low, lower, close. So that's no more the that's no this right here is no longer the low. So you delete it and keep going. Okay, we didn't get a 382 retracement, so it's not going to be a cipher or nothing like that. Okay, this is going to be junk in here, and that's probably going to be some kind of news, non-farm payroll or something. But because I don't think it's going to be anything. Because it's one, yeah. Yeah, that would just be junk for me. I wouldn't trade that. Okay, we get a push up. Okay, so now what does this look like? Swing high to swing low. 786, still junk. Nothing, 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 nothing. Okay, now we're getting that push back up. So if we draw from swing high to swing low, which is now over here, okay, we got a 382 right in here, and we got a 50% that we touched right here. Okay, so our first part of the pattern would be something like this. Okay, for a bat pattern, and then we'd have to draw in our fib retracement from the downside to the up, swing low to swing high. Okay, didn't quite get it there. It doesn't look like. Let's see if we can get, okay, so now that price has come back down and hit the 50% retracement, we are now on bat pattern completion alert. If we can break above this this high right here and complete up here at the 886, so you could actually draw in your predictions of where price is going to go now. Okay, something like that. Oh, what did I do? Guess I deleted it. Okay. Swing high to swing low, 50%. Swing high or swing low to swing high, 50%. We actually got a 618 in there, but it's fine. And then we're looking for a rally into the 886. Okay. This bat pattern would be valid as long as we stay above this A point down here. So scroll through the charts. Nothing lower. Okay, we haven't violated it yet. We're close. Okay, we violated. So this pattern is not going to be valid. Delete it. Okay, and start over. And that's the process that you have to go through when you're looking to backtest. Okay, I mean it's just you gotta go through the steps, step by step for your rule set and see how it plays out. And then when you do find a trade, that sets up and meets your rules or whatnot, you want to log that data so you have it. That way you can crunch the numbers later on. What is this? This is going to be too far, isn't it? It's going to be way too far, I bet. No? Yeah. What I was looking at is this move right here. This could have been a cipher setting up, but it's not going to be. Yeah, because yeah. So because it closed below the 1414, it's no bueno. But okay. And then what I like to do is as I go through the charts, I like to scrunch them up and just see if I've missed any legs and stuff as I get farther into the chart. So I don't see anything sticking out. So let's zoom back in. But I mean, it's a back and forth. I shouldn't say battle, but progress to find the trades. Um, is this a cipher? Maybe. What I'm looking at is right here. This is what I'm looking at right here. I'm looking at this move right here. Okay, that'd be a cipher if it measures out right. Let's see. Okay, so we're good there. We hit the 618. We don't close above it. Do we get the 127 extension? Okay. Now on this one here is going to be valid. Okay. We do touch the 1414, but we don't close below it, so it's valid. So it's going to look like this. At least this part of it is. I still got to measure out the completion part, but the initial setup is valid. So let's see if we get it. Let me pull up my data so I can make sure that's correct. The low is 2056. I'm at 2056. The high is at 2215. I'm at 2215. Okay. Anytime I get this close to the B point with the decompletion, I like to make sure that I'm got my fibs on correctly, because if it completes at or below the B point, it's not valid. So price did rally up there, and it did roll over. I don't know if it hit target. Let's see if it would have hit any targets at all. Yeah, see, it would have hit the 382 before. Looks like eventually getting stopped out for break even on the second half of your position if you trade two positions. And then just trade sideways for a little bit. So this one here is going to be marked as a winning trade. However, I'm only going to highlight half of it. Okay, because it, if trading two standard, taking two standard targets, the 382 and the 618 would have been a one target winner, which would have only won half the position. So excuse me. So moving on, and it, when you're back testing stuff, if you were collecting data, or if I was collecting data on this, at the moment, I would just go to my spreadsheet and key in everything and go to the next trade. But because it's not what I'm doing right now, I'm kind of just looking for the patterns, and then I'm gonna go back one pattern at a time to see how it plays out. So I'm not doing that spreadsheet. I got another spreadsheet anyways, but I did that one to kind of show you, kind of give you a blank. Let's see. No, that's nothing. Nothing. Do we have something right there? No. Oh, maybe we do. Yep, we got a bat pattern right there. That's what I'm looking at right here. X to A to B, B to C, and CD completes up here. Question is it going to be a winner or a loser? Sideways, 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 rallied up a little bit before rolling over. So, because it did roll down, I mean, it could have been a winner. But let's see. Yeah, see, it would have been a winner because we never hit the 113. So retracements, and then you got to roll your fibs up. No, I don't roll them back down as price comes down. I leave it up at the highest high, and then if it continues to go up, I just roll it up some more. Okay, so it would have hit the 382, and it would have, if my stop was up here. Okay, if it hit the 382, then you roll your stops to break even, right? A little bit before that. So we wouldn't have got stopped out before hitting target 2. So it would have been a 2 target winner. So delete this, delete this. I'm trying to keep my charts cleaned up. And then turn this green. But, I hope that kind of gives you an idea of what it takes to backtest. It's not a race. To get it done, I mean, I can probably backtest a strategy in a day or a couple hours or something, but it's more about, you know, building your visual, um, uh, it's more about building your awareness and finding the trade setups that you're looking for. It's more about making sure that you're following the same rule set for each trade setup as you've predefined before you started backtesting. It's more about collecting as much data as you can from the start so you don't have to go back and redo anything. It's more about getting the most out of it than just doing it to do it. Um, you know, and once you get done back testing, then you go into live, and I say live, you go into demo trading, and to make sure that in the demo account that you can find the same trade setups and trade it the same way, and be profitable in that demo trade account. Okay, now demo trading is a good tool to have, but just because you've back tested it, just because you demo traded, when you go trade live, I wouldn't go trade $100,000 account or $10,000 account or something like that. I would start off maybe $1,000 or a couple $1,000, just something small to get your feet wet, to make sure that with live money at risk, that you're not sabotaging yourself emotionally. um, because I mean it can be tough. So I hope you enjoyed this video. I mean, it was a little bit longer than I wanted it to be, but hopefully it's informative enough. Um, and you gain some valuable information from it. So with that in mind, do me a favor, hit the like button, hit the share button, leave a comment below, reach out to me on Twitter, follow me on Twitter actually. We do have a great trading community over there. Um, there's traders that are beginners to professionals, who trade full time for a living, who work for hedge funds. I mean, there's a lot of traders over there. Now, if you like to trade advanced patterns, or it's something neat, or you're interested in learning how to trade them, um, or if you just want to learn how to trade for yourself and be profitable, and you want a full education, which is highly recommended, I would go over to tradingpower.com. and fill out the trader assessment and reach out to Charles Miles and let him help you get set up with a 12-week transformation course. Um, you won't regret it. It is a little pricey, but you get what you pay for and more. Um, you know, you don't just get an online course to take at your own pace. I mean, it is an own pace course, but you know you have Charles, you have Akil, and you have Greystone, who are phenomenal traders and who are phenomenal mentors and who really want to see us succeed. You know, I could go on and on, but I'm not going to. But if you're serious about your trading career and you're serious about making a living at it and being consistent at it, or just replacing your income, um, go to Trade Empowered, do the trader assessment, reach out to Charles Miles, and and get on board and make things happen. You know, at the end of the day, it's your actions is what's going to give you the results that you want. So if you do nothing, you get nothing. But with that in mind, uh, you know, uh, with that in mind, I mean, I'm going to end the video here, but you know, uh, just remember to stay disciplined in your trading and don't do anything stupid. Thanks for watching, and until next time.